Good morning. If I could have, excuse me, if I could have everyone's attention, please, I want to open us some quick word of prayer. Father God, thank you for the gift of this day, Lord. We just pray your blessings on this, the people gathered here today, our families, those bless the work we're all trying to do, and I ask us all in Christ's name. Amen. So, the first order of business today, we're going to take up Representative Camp's measure, House Bill 814. Chairman Camp.
Good morning, Mr. Chair and members of the committee. We thank you very much for allowing us to be with you this morning on this measure, which is HB 814. I do have a sub, which I'm hoping you have in your packet, and I want to give accolades to the Office of Ways and Means because they got this literally 20 minutes ago. And I thank Legislative Council for putting this together at a very last minute. LC 500721S is in Sam. All right, so when we brought this measure last week and we discussed it, the big thing was we don't want money to not be used from this project for state projects, for projects of broadband. So effectively, this bill, which has been modified, any grant or sub-grant received pursuant to the Broadband Equity Access and Deployment Program established pursuant 47 U.S.C. 1702 or the American Rescue Plan of 2021 for the purpose of making investment in broadband infrastructures. So basically, this language replaces the previous language, which is the intent of this bill, is to not make those funds taxable to entities that are bringing broadband. We used 3% last time, the way we were measuring it out. This actually provides that all the money goes to actually putting broadband where it's needed. So if I'm open to any questions at this point, we do have we do have some numbers. If anyone was interested in that. Basically, for every $1 million, $57,500 would not be taxable, and that money would provide essentially 2 more miles of broadband.
Any questions of the author? Chairman Newton.
Yeah, thank you. I love the bill. There, do you know if does the federal government tax this money now? So they still do.
They still do. We have a bill in.
They're trying to fix that.
Yes,
Yeah, it's kind of like the rescue money. And
yeah. There's
PPP
bills in the
and
House and the
everything
Senate and D.C., but it hasn't passed.
They give it
yet.
to you and then take 40% back
Yes.
or something. So you're trying to fix that too
Yes.
at a different level. Well,
Yes.
thank you for the bill.
Thank you, Chairman. And that's a good point, because when we're looking at dollars and we're looking at all the roads in Georgia and all the residents that live on those roads in Georgia, when that number going back to the citizens, I think, is imperative. So I appreciate this committee entertaining this.
Thank you, Chairman Camp. I'm going to recognize Representative Buckner.
Thank you, Mr. Chairman. So even though the words aren't here, it is still limited to rural broadband development because that's where the grant funds come from. Is that correct?
That is correct. And both these projects are for areas that lack broadband. So in our state, we've got a broadband map I believe we passed around last time. I'm not sure if we have it this time. Those areas are not in dense areas. They're areas like where we live.
That's what I was counting on. Thank you. Great bill.
Any further discussion? Hearing none, all in favor signify by saying aye. Aye. Opposed, same sign. Carries unanimously. Congratulations, Chairman Camp.
Thank you so much.
Thank you so much.
Where's my next one? Okay, next we're going to hear House Bill 971 from Chairman Newton. And this is a hearing only.
Thank you, Mr. Chairman and members of the committee. Got House Bill 971, LC 500664. House Bill 971 is a bill that actually encourages firearm ownership, and it encourages it to be done in a what I would call a responsible manner. As many of us who were raised with firearms, it allows citizens the option of using a tax credit, a portion of the tax obligation they already have, to use up to $300 of that obligation to do one or two things or both: to obtain training in a firearm safe handling instructional course, and to purchase a safe storage device, whether locks or a safe. Many of us know since 2020, and especially we've all heard of the defund the police movement and some of the challenges our sheriffs and police officers have had in recruiting and retaining, that more and more individuals are actually feeling the need to take a certain amount of responsibility for the protection of their own family and themselves. Reports are that since 2020, over half the handguns have been sold to women. Pretty much trying to take that responsibility on their own hands, often, once again, to protect themselves or to protect others. Many others are considering purchasing a handgun, but they know there's some questions about safety, especially with children they're trying to protect in the home. Many of these people, like I say, may not have been grown up in a firearm owning family or around hunting. Many of them may have, but especially this bill is really written for those who may not have. HB 343 allows those individuals to do a couple of things: to get properly trained in both safe handling, in use, and in storage of a firearm, and to obtain a safe storage device, particularly if they have children around the home. It would allow that firearm to be readily accessible, but also secure at the same time. It would decrease the chance of inappropriate access, especially children or visiting children, if you have children who visit, even if you've trained your own very well. Most importantly, it will actually, if these are actually done, if these are stored properly, it can be less likely for criminals to get a hold of guns. That's guns stolen out of vehicles and homes are the most common ones to be used in gang-related shootings. Homicides are over 60% of the deaths of children are due to homicide. That's a gun that's been obtained in an illegal manner and obviously used in an illegal manner. And so if we can decrease the number of criminals that get a hold of the guns, we can significantly decrease it. Also, mental health is something we've discussed, and suicides are about 30% of the deaths in children and teens every year. This will help that if a parent, a lot of children are going through things and you may not even know it, so it'll help a parent feel secure about that. And finally, there are some accidental shootings, but really over 90% are either homicides or suicides. And we think this bill will help in that manner. We think it will give responsible parents the option, the ability to use part of their own money to both get properly trained and then safely store or secure a firearm and be able to protect themselves and their children. I hope we do have some people here, I think, that can speak to the training aspect of this, which we think is a crucial part of this bill, and I'm glad to answer any questions.
Thank you, Mr. Chairman. Chairman Newton, thank you for bringing this bill forward. It seems like a great way to incentivize best practices without mandating anything from our responsible gun owners. I had a question about particularly the definition of firearm secure storage, just to make sure that line 30 to 31, by key, combination, or other similar means would have you reviewed that in terms of its applicableness to fingerprint scanners?
Yes. It does. The way it's written is written to include biometric locks, but most of them have a code or a biometric. Obviously, your hands can get dirty or sweaty or something like that, and so it can be a code or other similar means. So biometric is, and that is an excellent way to keep it out of the hands of children.
Appreciate your decreasing the access to lethal means while ensuring our gun owning rights are kept protected.
That's very important, and it's optional. It's completely optional.
Recognize Chairman Fry with a question. Did you,
Chairman?
I'm sorry, Chairman, Representative. Sorry
Yeah, I
about
was like,
that.
is this a trap?
No.
He's very
Thank you, Mr.
cautious.
Chair. Now, look, Mr. Chair, I just want to tell you how thrilled I am that this bill is getting some traction. We've been talking about safe gun ownership and safe gun storage in my lifetime since I remember my whole family talking about what's the best way not to get shot or shoot somebody by accident? Never point a gun at them, right? I mean, this stuff is extremely important, and I really appreciate you bringing this forward. What what I have a question about is $300 enough? I know my gun safe costs almost that much, and I don't know how much more would be left over for firearm training, which I think is as equally as important as safe gun ownership. So is that a number that we were just kind of feeling like we could take out of the budget this time, or are we really looking at, okay, what's a gun safe cost, and then what's the 3 to 5 hours for firearm training that would be necessary?
It's 2 hours or more. Good question, and thank you. I checked around. $100 to $150 is not an unusual basic instructional course in firearm, safe handling, shooting, and also storage. So there's some classroom work, and I think we'll hear from somebody who does one of those. The $300 obviously is a figure. There are a lot of biometric and code gun safes. We're really talking about handguns in general. A walk-in safe. Wouldn't even pay the sales tax on a walk-in safe,
right.
or some of the larger ones that real gun shooting enthusiasts would have. So it's really to protect, since those are the ones that are being stolen and used in gang-related activity. They're usually the ones that, if there's an accidental or a suicide, they're much more common for handguns. And handgun-sized safes, I have checked, and $100 to $200 is not unusual. So this does leave enough. Technically, it is one per taxpayer. So on a joint return, you could theoretically get a safe for your vehicle, which is another place they're stolen from routinely and used in crime, or at home, or both.
All right, I'm going to recognize Chairman Martin for a question.
Yeah, Mr. Chairman, you got to one of mine. Was it your intent to allow a couple filing jointly to get two?
Correct.
And it was. So then the next question is it an intent for a taxpayer to be able to get it in multiple years?
No, it's one time in the 5-year limit of this
Okay,
bill.
well, that's what I was trying to look at. So then I just draw, this is more of a technical question about the administration of the tax credits than the what you're doing for is, if a taxpayer is denied because they're out of credits for that year, my question would be, would that taxpayer go to the front of the line for the next tax year's credits? That's just, that's how you want to administer it, how the department can administer it. But I think that's a valid question, that if you happen to be, if this is by fiscal year or calendar year, if you happen to be the last person to miss out
Just
on the
over
$5 million
limit,
and,
right.
and waited to apply in January, you don't want anybody to delay. If you're trying to create this activity, you don't want them to go, okay, they're out this year, I won't buy it, I'll wait till next year where I can get the credit. You'd like them to go ahead and do it if they were amenable to do it and take their credit for it. So just a suggestion or a question about how you would intend to handle that to get the prescribed, stimulate the activity you're looking to.
I don't know if the pre-authorization would carry over to the next year. I don't know if we have an opinion from DOR.
If it went over the cap, it would be
Austin,
yes.
Tell everyone in the audience who you are and who you represent.
Austin Gibbons, Director of External Affairs and Communications for the Georgia Department of Revenue. So Chairman Martin, we would prorate based on what was left in the cap.
Okay, yeah, because you're pre-authorized and everybody might not. How long do you give them to use the cap? You pre-authorize me for $300, and,
right.
And when I file, you won't know until the end of the year when they're doing the tax return if I used the $300 or not. And you could be like an airline oversell and figure there's something. I just would suggest that it somehow the process not be disadvantageous to someone if they were going to do the activity. And it sounds like you're at least thinking in that way. So we belabor, Mr. Chairman, I know we got people that want to speak to it.
So while you're at the table, Austin, just a quick sort of from the department's perspective, share with us the privacy aspects of anybody that want to take advantage of this. What's the department's position on that? How open are these, how private are our tax returns?
Right. So any taxpayer information, any claiming of a credit, any deduction, anything like that is confidential taxpayer information that is protected by state and federal law. We have agreements with the IRS that are very strict on data privacy. We have very strict data privacy standards for our employees. If anything were to ever get out, that employee would face consequences including termination. We also have in the past had instances where, prosecution has been pursued due to it being a crime under state and federal law to release confidential taxpayer information.
Thank you. I just want to get that, make that clear, make sure everyone understands that protocol. Who do we have right here? All right, Representative Butner for a question.
Thank you, Mr. Chairman. As a public health educator, I've promoted gun safety training for years, and I love the personal responsibility incentive in this great piece of legislation. I do have a question. Is this a bipartisan bill?
Well, I hope it sounds like it's getting bipartisan support.
But there are no sponsors that are signed on that are of both parties?
I haven't looked to see who has signed it since we originally dropped the bill, but
I think you'd get a lot of support if it were. Thank you.
Any other questions from members of the committee? If not, I believe we have some people signed up to speak. Daphne Jordan with Packing Pretty Firearms. You'll join us up here, Ms. Jordan. And again, for the record, tell everybody who you are and who you're with.
Good morning. My name is Daphne Jordan, and I am the owner of Packing Pretty Firearms. It is a firearms instruction company for women only here in the state of Georgia. What questions may I answer for you?
No, you were here to testify.
Just go ahead and speak? Okay. So I'm here to let you know that since 2016, well, I'm a native of Atlanta, born and raised here in Georgia. I became a firearms instructor in 2016, and I began training women only at that time, and I also launched a women's gun club. And gun safety is very important to the women in the gun club, as well as the novice woman learning how to use a firearm. And this bill would be very essential for us. It actually came up during our women's bullets and brunch meeting that we just had by an attorney that joined our gun club, as she's interested in seeing how the bill will turn out, because we do spend a lot of money, or they spend a lot of money for firearms training and for proper storage. They also have to purchase holsters and other things for the safety measures as they become responsible gun owners. The average cost of firearms training for women for a 4-hour course is $150. And of course, firearms itself have increased. Back in 2016, you can get a firearm for $300. Those have now increased. As you know, they've literally tripled. The gun safes, as you mentioned, you can get those for handguns anywhere from $100 to $150 for the biometric safes. And those are the ones that I highly recommend, because they do use fingerprint technology to prevent anyone else from accessing anyone or your firearm.
So you're for the bill?
I am absolutely for this bill.
Do any members have any questions for Ms. Jordan? Thank you, Ms. Jordan. We're going to
It's my pleasure.
allow someone else to testify if needed. Is there any members of the audience that wanted to come speak for or against the bill? Nobody from the audience? Well, this was a hearing only. Are there any final questions for the author of the bill? Okay. Well, thank you, Chairman Newton. And there being nothing else come before the committee, we'll just the meeting. This Income Tax Subcommittee of the Ways and Means Committee stands adjourned.
Chairman Chokus, are you ready? We'll go ahead and call the Valorem Sub-Tax Committee to order. And Chairman Chokus, are you ready to present your bill? I understand this is a hearing only. This is the first time I think we've heard the bill. Is that correct? So if you will, please present the bill.
Thank you, Mr. Chairman. After my opening remarks, I'd like to bring Hunter Loggins from the National Federation of Independent Business to come and further clarify this legislation. But as business owners, we all know that property tax is a levy on property that the owner is required to pay. Typically, it's based on the value of property, including land and improvements. This form of tax is relatively fair and a major source of revenue for local governments and is used to fund various public services. Tangible personal property, TPP tax, on the other hand, is a specific type of property tax that applies to personal property, which is movable or tangible. This can include things like machinery, equipment, furniture, things used in business. Unlike regular property taxes, which are generally levied on real estate, land and buildings, TPP taxes are levied on physical assets that the business owns. The key difference lies in what is being taxed. Regular property taxes focus on real estate, which is immovable, while TPP taxes are levied on movable items that are used in the operation for businesses of which a business owner has already paid sales tax when he purchased those pieces of movable property. Tangible personal property tax is the number one most complained about tax from small businesses. This is primarily because it introduces significant complexity and a high compliance cost for businesses. These taxes require detailed record keeping, extensive reporting, and can be particularly burdensome to small businesses, and especially small business. I'm going to underscore that. Additionally, TPP taxes can lead to economic distortions as business might alter their investment decisions to minimize the tax liability potential, avoiding purchases of new equipment and technologies that would be subject to tax. This hinders productivity and innovation. However, there is a system in place that can help. Currently, in Georgia, there is a threshold for which businesses are exempt from paying TPP taxes. That threshold is an antiquated number of $7,500. $7,500 in today's economy will buy you little more than a desk, a couple of chairs, and maybe a laptop. The legislation that I propose to you today will help gradually alleviate this burden on small business in the short term and for all businesses in the long term. Originally, HB 808, we looked at to do a one-time increase in exemption threshold from $7,500 to $50,000. However, after much discussion with experts and small business owners, we found a better option under the proposed committee substitute. That substitute would raise the exemption threshold from the current $7,500 to $20,000 for year 2025, to $35,000 in year 2026, to $50,000 in the year 2027, and then a complete elimination of this burdensome tax in the year 2028. And I'll be happy to answer any questions. And as I said, I'd like to introduce Hunter Loggins, if he could join me.
If
Yes,
you
sir.
will, Chairman, let's see if we got questions first from committee, and then we'll
Yes, sir.
we'll allow presentation. So, thank you for that. So we questions committee. Who is to my friend in the corner, Bruce? If you will,
Yeah,
Chairman.
Thank you, Chairman. So, Chairman, thanks for bringing this bill. It's confusing at best for the small business owner, and you may have to turn to the Department of Revenue to get this question answered, because I never can get it clear in my mind. Are you taxed on your tangible business property? So take a small business, take a real estate office. You've got a desk, a computer, you've got a copy machine, you got a paper shredder, you got all this stuff, but typically a replacement cost, it might be a little bit higher. So is the tangible business property taxed on replacement cost, actual cash value at the time of the return, or is it the depreciated book value, which your CPA's carrying those assets on the books at?
Well, the property tax that you originally declared, to my understanding, and as
It's
I
an
said,
annual
Hunter, you
return.
correct me on this, is depreciated over a certain length of time. And then with equipment, you more or less rapidly depreciate it. But once you depreciate it, you still have to buy new equipment to replace it. So then the new one kicks in.
Well, okay, I'll get it. It's you return on your annual return, you return the depreciated value that you're carrying on your books at.
Department, I don't know if department's here that may be able to speak specifically to the question.
Austin Gibbons with Department of Revenue. I would have to get back with our team and see about that. I believe this tax is entirely collected by the locals, but I'll need to double check.
Chairman Williams,
So I don't know that we'd have a comment.
yeah, Chairman Williams, and it's been a while since I've done one, but I think your question alludes to the fact that if you have depreciable tangible property, on your books, you've depreciated it, that sometimes maybe the value in which you're assessed is different from what your depreciation schedule may be. And again, it's been a long time since I've done one, but I think in some cases that is a correct assumption or assessment that you just made, that sometimes they can be different. I'm not saying they are, but they could be.
I think we just approved that it is confusing at best.
Yeah.
None of us are sure.
One question, I mean, we always refer to business, but is this also applicable to just personal property? Like a boat? Or personal property such as, it's not? No, yep, okay. Yeah, maybe we may want to get, I want to make sure we get clarification on all of it. Well, what is personally, it says except for motor vehicles, trailers, and mobile homes. So that's what the, I think and again, we may want to make sure that we get these questions right and make sure that we get, proper answers from department. So if department is listening, can we start with this? So I think we've got a question as to personal property, such as boats or other items that may either conform with vehicles, trailers, that sort of thing that's in the bill. Things that are outside of that. One question Representative Buckner had, farmer equipment, which I think is already exempt if it has a farm use to it. But again, we want to make sure we get department to clearly answer these questions. Any other questions from the committee? We have two. Is this Representative? I'm sorry. Off? All right. I think your question was asked. All right. Representative Fry is waived. Any other questions? Chairman Dickey, what number are you, sir?
1 to 10. Is it on? Thank you, Mr. Chairman. I appreciate it. And along those lines, Chairman Williamson, this is a very confusing tax for small business. I've dealt with it, and thank you for bringing this bill. It seems like some businesses are treated a little different. I wouldn't say treated different. Appraised value and taxes. We among small business, we compare and talk to each other, different counties, and so it is a very confusing tax. I've dealt with it in the past, and but my question is, why the phase out? Why not just go ahead and do away with it? Well, I mean, what's the advantage, seriously, of taking 3 years to phase it out?
Well, it's a great question, and that was in the original bill. We felt that perhaps the local governments needed a little bit of a phase out, just in case they needed to build that into their budgets, and so that was for the reason for the phase out. But if that would be a friendly amendment that I would be agreeable to.
Yeah.
Yeah. Which brings me to the next question.
Yes, sir.
How much does, on average, a county bring in from this tax, and which is going to be an issue for some, I assume, or we have to make it up somewhere else. So if we got a feel for how that will affect some of our counties, especially our rural counties.
Yes, sir. If you would allow me, Mr. Chairman, to bring Hunter to address that, I would appreciate
and
it.
I think that's one of the questions we'll let him address when he does come.
Okay.
Next is Representative Fry. I think you do have a question. Go ahead.
Yes, sir.
Thank you, Mr. Chair. And this is just clarification to the earlier question, and texting my accountant, and I appreciate you bringing this bill. I think this is a fabulous opportunity. I hate being taxed every year on something that I already paid tax on.
That's right.
That's horrible. So the tax commissioner calculates the depreciation rate of your asset, and it's a slower schedule than your tax return is going to be. So that's how that would work. But
Thank you.
and if we can figure out how to add boats in here, I would be very happy about that. At least little boats, right? Thank you, Mr. Chair.
Next, Chairman Stevens. What number are you, Chairman? 2?
And again, thank you for, there we go. Thank you for bringing the bill. It's, I think, without objection, I'm going to sign on to it whenever I get out of here. This goes along with inventory tax, which is extremely confusing to small business. But this one especially, whenever it shows up on your bill after a period of time, I think Chairman Williamson nailed it. Is at very best it's confusing, and it's something that we ought to eliminate from our code.
Mm-hmm. Thank you.
Any other questions for Chairman Chokas? Well, I know we do have, again, we're going Hunter, I know you're signed up to speak, so if you would, and maybe you can address some of the questions we have here, in addition to any presentation you may have.
Thank you, Mr. Chairman, and thank you, Chairman Chokas, for bringing this. This is a huge win for our small businesses. I'd like to present just a small presentation that we gave in Chairman Chokas' Small Business Development Committee last year. Some of you were present, and some of you are small business owners, understandably hate this tax. Some of you are NFIB members. So I want to apologize. Our resident accountant, NFIB member, and County Commissioner Allison Couch was supposed to be here today, but running a small business, it's tough to get away for 30 minutes, especially to Atlanta. So she's a resident expert, but I've learned a lot within the past 2 years on this burdensome tax. It's a little bit of her background. I'm just going to skip 96% of our small businesses. This is a poll of our NFIB members, pay the tangible personal property tax. Almost all of them says it's a burden, significant or moderate in general. It's repetitive, it's inconsistent, it's outdated, it's confusing, as Chairman Williamson alluded to. It's a nightmare for our small businesses to pay and to calculate. Let's give an example of a laptop. You purchase it at a local tech store, you pay sales tax on it, you create work using a laptop, you're generating income tax, you continue to own laptops every Q1, and you get hit with the tangible personal property tax every single year. But Representative Fry said that it is depreciative, it depreciates. However, as Chairman Chokas said, let's say you have to replace that, that's a brand new laptop, you have to then start paying it again, and it goes down and down and down. It's essentially an infinite tax. And another example we heard of is someone inheriting a desk, maybe from the 40s. the tax assessor came in and arbitrarily said, you owe this amount. It was up in the thousands on that desk for tangible personal property. How did they get that number? We don't know. It's just whatever they decided. And lastly, you sell the laptop, you got to pay capital gains on it. It's inconsistent reporting with this tax. Like I just said, enforcement is all over the place. There's the frequency of audits is unknown, and reporting requirements is confusing at very best. To answer some of your questions you had earlier, boats and aircrafts are not included. If you want to look at the screen here, if you look at the bracket, it includes everything from inventory, Freeport inventory, which I'll touch on in a minute, furniture, fixtures, machinery, equipment, all those items that you need to run your day-to-day operations are taxed, and other personal tax that's not otherwise defined, which I don't even know what that means. Could be anything they want. And I want to touch on something that Chairman said in his opening statements. This sort of tax de-incentivizes innovation. If I know I'm going to get taxed on a piece of equipment, I'm not going to buy that piece of equipment to expand upon my business, to better my business, and to grow it. So are there any questions so far on this slide here? And apologies, boats are not included on this one. So the threshold is outdated, as the chairman said in his opening statements. Currently, it's at $7,500, which is, in today's environment, a desk, 2 chairs, and a laptop. A multi-year adjustment is needed, and that is why we suggested the gradual increase of 20, 35 to 50. But if you want to just eliminate it completely, I'm not going to say anything about it. And the eventual elimination, here was our reasoning behind it. You would increase it from $7,500 to $20,000 to incorporate more small businesses within the exemption threshold. Year 2, 20 to 35 to put Georgia on par with surrounding states in terms of the elimination threshold. Year 3 would be 35 to 50,000 to support medium-sized businesses, and year 4 eliminate it completely, because we all know how much of a burdensome tax it is. I'm happy to answer any questions. I know we had a good bit of them, and I'm trying to remember what they were, but in the interim.
Well, I'm sure the committee will, if you will, committee, any of those questions, see if our presenter can answer. All right, first one.
And Mr. Chairman, if I may say, I know exactly how to calculate each of your counties and how much you're getting in tangible personal property tax. It is a nightmare, as you saw on the previous slide here. You have to take the commercial inventory, CI, CP, CF, CZ, add industrial, II, IP, IF, IZ, and then subtract Freeport exemption, which not all counties do, and then multiply it by the millage rate, which is set as Representative Fry said.
Okay. Chairman Newton.
Thank you, and thank you for the bill. I appreciate the small business aspect of it. I'm curious those numbers that the counties get, with regards to the gradual phase out, and the fact that I'm wondering, when you get to the eventual full phase out, are you helping large businesses more? This is kind of a question for you, Hunter. Are you helping large businesses even more, to the counties at least funding detriment, or is there any advantage to keeping the 50,000 or some cap that, if you want it to help small business in particular, without overburdening the county revenue?
Philosophically, I don't think I could say keeping a tax on any business. So that's why we say, let's just go ahead and eliminate it completely and help all business. And we have small businesses who have a lot of equipment that would go over the threshold, even though they are smaller in scale with maybe 100 or fewer employees. They would have to pay it just because the nature of their work. It could be manufacturing. I know ag is exempt, but their subsidiary, like how it trickles down through trucking, they have larger pieces of equipment that would fall under it, and they wouldn't be able to take advantage of the exemption threshold.
Thank you. I guess I was just thinking about a few Home Depots in a county and a Lowe's and that have tremendous inventory that it as I say, might leave a mark on the county budget if all that inventory is no longer taxed. And I guess I'm just trying to find out relative numbers. I agree the 7,500 is kind of crazy to still be at that level, but just almost an annoyance of for accountants and business owners. It's just a question. Maybe we'll get some more information about from the county's point of view.
And that's completely understandable. I would
rural.
say if it was to be eliminated, those businesses could then reinvest what they would be paying back into the business and back into the community. They could hire more workers. They could get new equipment to generate more revenue. So that was our thinking there. And I do want to say, doing all the math over the past few months, roughly the amount of TPP in total property tax can range anywhere between 2% to 5% of just property tax, not the entire revenue stream of the county, just the percentage of property tax.
That, and again, if I may, Chairman, that may be your question and your comment that you do have numbers. That may be helpful if you would share.
Sure. Yeah.
what
Happy to get those
numbers
numbers, but like I said, it is onerous trying to put it together. But call any time, for my time is thine, and I could come to the office and tell you exactly how much your county is getting in TPP.
Next, Representative Buckner, number 8.
That was my question. I was just curious the impact to the counties and if there's an impact that's onerous, does this schedule fit, or would a different one work better and that kind of thing?
I think we're hearing we do want some information on that, if you will. Chairman Blackman.
No, you can waive. I just wondered if they all, do all counties collect it? I'm assuming that every county collects it.
Most counties, and I think all counties do, but the way they collect it is different and inconsistent. I've heard stories from our small business owners that have multiple locations throughout many jurisdictions, and it's different for each county how they collect it, when they audit, or if they audit, how they assess it. So yeah, but I'm pretty sure all counties do.
They probably don't enjoy having to do any of that, do they?
No, and originally in one of the earlier versions of the bill, we had a provision. It didn't seem to make it in this, but I would highly suggest it. If a business doesn't pay TPP, they don't have to submit the paperwork, and the county doesn't have to take it, because currently, even if you are exempt from paying it, the county still has to do the paperwork. They still have to file it. Businesses still have to file it. I would just suggest making that a friendly amendment.
That's all I see of questions of committee. I think we've had a pretty healthy discussion here, and I think there are some questions on the table. I think we've had maybe Department of Revenue, after listening, can get us some more information, and then Hunter, I quite frankly, I think it would be beneficial to share all of the data or from a county perspective, so that we can look at it. And
sure.
I don't know if ACCG has got a prepared. I don't see a sign up here. I'm not suggesting you weigh in. If you want, you're welcome to. Now would be the a time.
Good morning, Chairman Knight, members of the committee. My name is Dante Handel. I'm with ACCG. What I'd like to express that we do have some concerns with this bill, especially as it concerns the fiscal impacts of it. The original version that was dropped definitely would have included boats, jet skis, and airplanes, as well as all that business property. I'd be concerned that this version may as well. I haven't had a chance to take a good look at the substitute, but I'm concerned that there's a very strong chance that it does. we asked a few counties to try and pull some data for us about going from 7,500 to that 50,000 number for the exemption, and it would definitely have a revenue impact in each of those counties. I think Gilmer County was showing that going from 7,500 to 50,000 would cost them about $1.2 million in revenue. DeKalb County going to that $50,000 exemption would be about 4.2 million total, and Chatham County 2.2 million total in exempted revenue if we were to make this change. Now, the assessors are required to track the property, the personal property under that exemption threshold. So I believe this was mentioned before, but the way that this exemption works is if you are under the threshold, then you have to file a return, but you don't pay. If you are above the threshold, then you pay full freight. And so going from 7,500 to 50,000 is a large jump. Going from 7,500 to exempting it entirely is a very large jump. Now to Representative Newton's question concerning large businesses versus small businesses, I definitely think that the large businesses would receive quite an unequal advantage on that. They'd be paying a lot more in the personal property tax just based on their size. And at that $50,000 exemption number, in most counties, if you were to add up the county, city, and school taxes, I think that's probably going to be a charge of about $1,500 or so, give or take, to that small business. I don't think that a business is very likely to stop buying personal property and investing in the business just to avoid that threshold. And under the existing $7,500 threshold, if they're already butting up against that number, then there'd be no reason not to move ahead and continue trying to expand if they believe that's in their best interest. Now, I don't want to speak for the other local governments, but I do believe that the schools and the cities who are in the audience also have some concerns about the fiscal impact of this bill. I know it's difficult to estimate, but I'd love to see a fiscal note if the committee were willing to request one, especially if it is limited only to small business property. We're easily able to pull information from the Department of Revenue's website for the total impact of all personal property collected. But as far as breaking it out into a certain subclass, such as small business personal property, that would be very difficult to do.
Right now, we're running up against time. It's 8:54. We do have rules at 9. I'm going to allow, I know Chairman Williamson, you had a question real quick.
Yeah, very quick, Dante. Could you do us a favor? Could you get some clarity on this question we asked about how it's taxed? And just to throw another complication in, I know that Section 179, I knew that the IRS had raised that, and it's over $1 million now. If a business owner is taking advantage of the 179 deduction, it's sitting on the books at zero. It's been fully depreciated or written off. I'm looking at Chairman Carson, who's the CPA, to my understanding. But this, so the question for Dante is, get us some clarity on how it's taxed. Yeah. Is it the value you're carrying on your books, or the original cost plus the county's depreciation tables? We just need clarity.
Yes, sir. I'll be glad to.
Thank you.
Yeah, and again, we're running out of time. I'm gonna let Chairman Stevens sort of end with the last question. I apologize. It's not rules; it's appropriations. So equally as important today. But I'm gonna let Chairman Stevens end our questioning, and we'll come back with more committee hearings.
Yes, if I want to make sure we're not confusing two things here. We're talking, this bill only addresses tangible personal property, desks, computers, that kind of stuff that's in there. We're not talking at all about an inventory tax, which is another tax altogether, which is huge in some of these counties. So this, in my mind, is an insignificant, no matter what size business you are. So Dante, whenever we're getting these numbers together, let's make sure that we don't confuse the two and we mingle inventory tax and this personal tangible property tax totally different.
Yes, sir. Thank you.
I appreciate Chairman Chokas, and I appreciate those who have presented today. Again, as we've got our next appropriations meetings starting in 4 minutes, let's come back. I think we've had several questions that I think a number of parties, Department of Revenue and Chairman Chokas, if you will help, let's get some more answers and more details from what we've heard today, and we'll have a second hearing. Thank you. With that, the Ad Valorem Tax Subcommittee is adjourned.